Welcome back. The Canadian labour market unexpectedly lost jobs for the second time in 4 months in the month of June, keeping the central bank on track, many economists say, to cut rates further this year. On the other side of the border, the U.S. labour market added more jobs than expected in June, while the unemployment rate unexpectedly rose. For more on today's jobs data, we're joined by Brendon Bernard. He's senior economist at Indeed.com and an expert in employment economics. Brendon, thanks a lot for joining us. Just let me tell viewers exactly what we saw this morning. About half an hour ago, the change in employment was a decline of 1,400 jobs during the month of June. That was in stark contrast to what economists had expected. Economists had expected an addition of 25,000 jobs. The rate of unemployment ticks higher to 6.4%. That's 20 basis points more than it was during the month of May. So from May to the end of June, the unemployment rate rises to 6.4% from 6.2%. And wage growth comes in meaningfully higher than expected and meaningfully higher than it was during the month of May. Wage growth on an annual basis comes in at 5.6%. That's way up from 5.2% in May and way up from the expectation, which was for wage growth of 5.3%. Brendon, what do you think?
Yeah, I start always on the job side of things. We can get to wages in a second, but flat employment numbers when the population rises nearly 100,000 in a month, that's a bad sign. And we saw it in the unemployment rate rising 0.2 percentage points to now 6.4%. That's not just above the pre-pandemic level. It's actually like not kind of starting by recent historic standards starting to look pretty elevated. And it's especially elevated for groups impacted by what's driving this weakness. And the weakness is really coming from slow hiring. There's not that many layoffs going on. That's not what's driving these weak job numbers. It's that jobs aren't getting started. And so anyone on the sidelines in kind of more precarious situations, job seekers looking for new roles, are finding it tougher to get it. And that's showing up in numbers like a spike in youth unemployment.
Talk to us about the wage growth numbers then, and how all of this looks to the Bank of Canada. It seems like there are mixed signals in here for the Bank of Canada. On one hand, unemployment rising significantly. On the other hand, wage growth accelerating.
Yeah, they definitely are mixed signals, and it's tough to know what's going on. Stackhan did mention that the latest pace of wage gains, while pretty solid across different segments of the economy, have been a bit higher among higher paid individuals. The wage growth at the top, in the upper quarter of the labor market has been a bit stronger. I've kind of thought this is sort of continuing a pattern where just wage growth has remained elevated even as the economic situation and the labor market situation has weakened. Part of me thinks this is still sort of a reaction to a slow-moving reaction to the jump in inflation we saw earlier, just because the fundamentals of the labor market aren't consistent with strong wage growth today. And so maybe there's still some catch-up from the earlier jump in inflation. But it is sending mixed signals for the Bank of Canada, because just looking on the job side of today's LFS, it is weak. It is one showing an economy where spending is likely going to be constrained, one where that would be consistent with the inflation data that generally we've seen, where things have we've seen disinflation over the past year, and then we see this strong wage growth number, and that kind of like we've got to weigh one against the other, and then perhaps that's why markets are reacting just with a little bit of caution in today's numbers, rather than fully kind of seeing this as a dovish report.
One thing we always break out is the distinction between part-time employment changes and full-time employment changes. The numbers here are remarkably small, given what we've seen many times in the past. only 1,900 part-time jobs added to the entire Canadian economy during the month of June, and full-time employment sank by 3,400 jobs, and that's where you get that net change of a loss of 1,400 jobs. Okay, what is your call on what the Bank of Canada does? The market says that the July 24th meeting is a coin flip as to whether the bank cuts rates then or not.
Wow. Well, it's tougher to. I don't usually like to go against the markets, and so that coin flip, I think, is the message to take right now. So I'll go with that. In terms of leaning one way or another, well, I believe we have another inflation report between now and then, which will kind of give us more guidance. I think we'll need to see a bit of a cool down on the price numbers. We saw inflation pick up a bit last month to really kind of be fully confident in sort of moving to the direction of cuts. But right now on the labor market side, I think get this jump up in unemployment now 6.4%. I think it's trending in the world of cuts, even if the next meeting it doesn't happen. The writing's on the wall for the Canadian labor market. We're kind of in a weaker situation right now. And if that has any material impact on prices, then I think we know which direction the bank will be going.
Okay, how about some quick reaction to the U.S. jobs numbers? Here we got an addition of 206,000 jobs. That was basically in line with expectations. It was slightly more than the 190,000 jobs expected. The rate of unemployment ticks up to 4.1%. That was slightly more than expected. And wage growth comes in at 3.9%. That's actually a receding pace of wage growth versus May and in line with expectations. Quick reaction?
Yeah, well, this is another one where there's a little bit of mixed signals because that unemployment rate number is coming from a different survey than that roughly 200,000 job growth number. And I'm actually kind of keeping my eye on that unemployment rate figure. It's come up over the past year. And I think a sign that while the U.S. labor market situation is definitely not looking like Canada's, and their economy is chugging along stronger than ours, I keep my eye on that because it does suggest that the earlier strength is receding a little bit, even though those payroll numbers are still advancing. And so I think that's consistent with kind of like a bit of a cool down. But the U.S. is still in that soft landing stage, whereas in Canada we've kind of our situation is a little bit worse than that.